Forget about trading with ICT for a second. This gold volume profile scalping trading strategy is a game changer because it is stupid simple and also it works almost all the time if you do it correctly. And I'm going to explain everything in this video. So there are two ways to trade this strategy. There's a failed auction setup strategy, and then there is a breakout strategy that we're going to be using with the volume profile. And we're going to be using this with gold, and the time frame is going to be 5 minutes only. We're not going to look at the 1 minute. We're not going to look at the 15 minute. Okay. So let's talk about the failed auction setup first. Okay. Because this is one of my favorite setup with this strategy. And I'm going to go over the timings, how you would plot your volume profile later on in the video. But first, we need to understand about the volume profile. So when you plot your volume profile, you're going to have a point of control. So let's just go here for the sake of this video. And at the moment, to change the settings of the volume profile, you can draw it anywhere on the chart. This is just so we can change the settings. Double click on here and change the row size to 1000 and go to styles here and turn on value area high and value area low. And then you can change the colors as well, just as I've did. So when you draw out a volume profile, you're going to see three levels. And this is the value area high. So I'm going to mark this out as value area high. And this right here below, value area low. And this red line over here is called point of control. Now, let me explain what are these three levels. So the price, the volume within the value area high and value area low is called a fair value or a balanced price, meaning that whatever happened within the value area high and value area low is a balanced price. Now, what does that mean? Well, the buyers and sellers are both agreeing this level to be fair. So there's not a lot of aggression, you know. No, the buyers are not in control, the sellers are not in control. It's just a fair value, okay? And the value area high and the value area low is when price is below the fair price. So that is where we can look for trades, okay? So the value area low is the lowest volume that was within the range, and the value area high is the lowest volume, okay, as well. The price, the volume that is within the value area low and value area high is around 70%, okay? So 70% of the volume was transacted within the value area high and value area low. And the point of control is where most amount of volume was transacted. So that is why it is point of control. It is the highest volume level. And around the value, around the point of control, price will consolidate because this is a fair value, okay? This is like, okay, this is like, you know, a lot of volume here and no one is going to like do anything. Okay, so for example, it's just going to consolidate most of the time around the point of control. But when price goes below the value area low or the value area high, it is in a discovery mood. So there are two things that can happen. We could get like a failed auction setup where price seeks below the value area low and then instantly it reverses and closes back above the value area low. Now that, ladies and gentlemen, is called a failed auction setup. When we have a volume profile and then we see price, first of all, this is very important, okay? A lot of people just neglect this, is that first, we are looking on the 5 minute time frame. Make sure your time zone is set to New York. And I'm going to also tell you about the timing later on in the video. Don't worry about that. So first thing first, what we want to see, guys, is a 5 minute closure below the value area low. We need a candle to close below the value area low, not wick, just close. And then we need price to close back above the value area low. So just like liquidity sweep, we are considering this as a failed auction setup, okay? There was aggressive sellers here, but they really couldn't get a follow through and price is now back inside the balance. Now, there are two ways to take your entry. Now, if before your entry, the point of control level is hit, the setup is invalid, okay? So when price is here, you can do two things. You can take your long entry from the retest of the value area low that was just reclaimed, and then you can target the value area high. But the point of control is a extreme red zone. So you're either going to go break even here or secure one partial because price can reverse from the point of control, okay? And this is called a failed auction setup. So let me just go here and let's say that price goes up like this, right, it peaks above the value area high and it closes on the 5-minute above the value area high, and then instantly, right, it closes back below. Now that is another failed auction setup. So you can take your entry directly or you can wait for a retest. Of course, it has pros and cons. You're going to get a better risk to reward ratio when you wait for a retest entry, but also you can miss out on a trade if the volume is significant. Okay, so your stop loss is all that's going to go above the high or the low. So let's say you take your entry here, you're going to target the value area low. And then you can take one partial at the point of control. And in the case where the point of control is way far down, you can go break even at 1-to-1 risk to reward ratio. The thing is, we have to protect our capital at the end of the day. I don't want my winning trade to turn into a losing trade. So at 1-to-1, I can go break even. So that is failed auction setup. Okay, we have volume profile, price closes above the value area high and then instantly rejects and closes back below. That is your short setup. And again, if price closes below the value area low and instantly reclaims that value area low, that is your entry and you can target the value area high. Now that was a failed auction setup, right? Now let's talk about a breakout. How would you identify a breakout, right? Because a lot of times what will happen is price will basically, let's say it goes up above the value area high and then it keeps going up because it can't just stay, you know, in the balance forever. So that is where the profile shapes come in. Okay, so there are three types of volume profile shapes. So there is a P shape, there is a B shape, and then there's a D shape. So a P shape is going to look like this, where you have a volume profile and most of the volume is to the upside, just like P. Okay, so this right here is a P shape. Okay, and then we have B shape where most of the volume is to the downside. Okay, so we have B shape. And then finally, we have the D shape where we have most of the volume in the middle. Okay, so that is like a D. Now, when you have a P-shaped volume profile, there's a very high chance that price will break out to the upside. Why? Because the buyers are in control. There's a lot of volume to the upside. So it means that the buyers have been controlling this level and they are positioning here to get a breakout. Okay. Or price can go below the value area low of this range and then break out. Okay. And similarly with the B shape, you can expect a breakout to the downside with aggression. Okay. Or price could go above the value area high first, which is, let's consider these value area high and value area low as premium and discount zones, okay? And then it will just push down. And when we have D shape, that's basically your failed auction setup best conditions. When you have a D-shaped volume profile, you're going to see failed auction setups play out most of the time. We're going to fade the edges, okay? So we can do like a push to the value area high, close back below. We can target the value area low, and then we can look for another setup like this. When we have a D shape, right, it is a consolidation market. When we have a B shape, it is a trending market. And then when we have a P shape, it is also a trending market. Okay, so ideally, you want to look for failed auction setups when we have a D-shaped volume profile. But honestly, if the setup looks good, even without the D-shaped volume profile, you can take it. I'm going to show you examples and you will understand what I'm talking about. But let's say that you want to take a breakout setup. Now there's a very logical way to approach this. Okay, so usually what happens is when we get a close below the value area low, you are waiting for a failed auction setup. But what if I want to see a breakout, what I want for price to do is create a new fractal balance here below the value area low, meaning that price is staying below the value area low for a lot of time. Okay, it is not going up and reclaiming that level instantly. Okay, so it starts consolidating here and staying below the value area low for quite a long time. Now, the way that you would take this breakout trade is you would first wait for price to consolidate below the value area low, and then you would wait for price to break this consolidation, okay? And once you get a consolidation break, there are two ways to enter, okay? There are two ways to enter. I'm giving away everything, guys. I'm not hiding anything, okay? So we have this, we wait for price to break out, and then we can take our entry on the retest, or we can enter directly, because when we get a breakout like this, price is just going to melt to the downside. Okay, so again, if price stays below the value area low for quite a long time, and then we get a breakout. Now, of course, I use order flow confirmation with big trades around here. If I see big sellers coming in, let me know in the comments if you want me to teach you order flow confirmation as well, because let's be honest here, this is just on TradingView, but if you can pair it up with order flow, of course your win rate is going to skyrocket. And I can make the next video on that. I just want you guys to let me know in the comments, okay? So that is how you would take a breakout setup if you don't get instant reclaim. And similarly, guys, if we get a breakout to the upside and we start like consolidating above the value area high, right? We stay above the value area high for quite some time, and then we get a breakout, right? That is a valid breakout. And then you can take an entry on the retest and you can target there. And your stop loss can go below this consolidation. So now that we have understood everything about the volume profile, let me teach you the exact timing that when we should be plotting this volume profile. So let's just reset the chart over here and let's remove everything. Now, this is London session and this is New York session on the gold. So what you want to do is go here, fixed range volume profile, and draw out your volume profile on the 5-minute time frame from 3 a.m. till 7 a.m. on gold. Okay, and this is what you're gonna see. So can you tell me what shape is this volume profile? Is this B shape, D shape, or P shape? Well, it is a D shape. Most of the volume is in the middle. So that means that these are the best conditions for what? Failed auction setups. So over here, when we have drawn out our volume profile till 7, there are two things that I want to see. If price is above the value area low, I want the price first to close below the value area low. And then I want the price to reclaim that level, right? And this happened today, by the way. And then you can take your entry at the retest here, and then you can put your stop here, and you can target the value area high. Now there's another scenario where price is already below the value area low, right? So in that case, so for example, let's say that price was already below, okay? This is the timing. I'm just showing you for an example. Price is already below the value area low. So in that case, we are not waiting for price to just close again below the value area low. We can just look for a reclaim, okay? Because price is already below the value area low. That's step one. If price is above the value area low, we wait for price to close below first. But if price is already closed below the value area low, then we only need a reclaim, okay? My apologies, guys. So that is the strategy, guys. And also, of course, over here, you can see we have the value area high, and we first get a close above the value area high over here. And let me just do it correctly because I changed it. So let's just go to 7. All right. So you can see we had a close above, and then we have instant reclaim. Okay, this right here. So this could have been your short position, your stop loss above the wick, and then you could have targeted the point of control. Now, in this case, you would have taken a partial, and then you would have gone close at break even. Why? Because the point of control is around here, and that's where you want to go break even or take a partial. Now, you can take 2 trades max per day in each direction. So if you took a long, you cannot take another long. And if you took a short, you cannot take another short. So now that we know about the strategy, let's move on to the examples. All right, guys. So here is example number 2. And what we're going to do is use fixed range volume profile from 3 till 7. Okay. And just so you know, I'm not bullshitting. I trade all of these strategies on my accounts, and you can see the balance over here. Okay. So what do you see? What is the shape of the volume profile? It is a P shape, okay? A lot of the volume is to the upside. So we can expect movement to the upside, okay? So notice what happened here. We have drawn out our volume profile till 7, and price was already below the value area low, okay? So all we needed here was a reclaim of the value area low. So just around here, you can see we closed above the value area low. So this would have been your long position. Stops could have gone below this wick, and at least I want to go for 1 to 2 risk reward, okay? And I know I say that you should target the value area high, but you know, in the long run, if you're just going for like 0.7 RR, it's not going to be beneficial for you. So 1 to 2, and this is what I would do. Okay, this is exactly what I would do. I would go break even in this case at the value area high. Why? Because if we take our entry here, there's not enough room. Okay, if I go break even here, I'm just, not letting the trade play out. Okay, so you have to use some form of like your mind and like discretion. Okay, I should go break even here or here. And in this case, I would go here. Now, since this was a breakout kind of conditions where we have a P shape, you can see that first we went below the value area low and then we reclaimed. So this could have been your first entry. Okay, this could have been your first entry. And notice what happened here. 1 to 2 hit, right? Now, notice what we happened here. We consolidated and stayed above the value area high. So when we got a push up, yes, we came down, right? We consolidated here. We came down, retested this level, and then we had another break. Now, this break here, guys, is going to be a long position. Why? Because first of all, the volume profile shape is telling us that we're going to be bullish. So now I could take my entry at the retest, right? Put my stop below the value area high, and then I can go for another 1 to 2 risk reward ratio. So this simple volume profile can literally give you the entire picture for the day. Of course, there are a lot of other ways to draw out volume profile if you watch my other videos, but this is a scalping strategy, guys, and I want to make things as easier as possible for you so you don't have to overthink about your trades. So let's move on to the next example now. All right, guys, here's another example, and this is a bit different, okay? So as I said before, you got to use a little bit of discretion. So fixed range volume profile from 3 a.m. till 7. Okay. And now you can see that the most of the volume is to the upside. So we can expect higher prices. Okay. So first thing first, we were above the value area low. So first, we need a closure below the value area low. Step 1. Step 2, we need an instant reclaim. I don't want price to just hold here, consolidate here, okay? So close and then instant reclaim. This would have been your entry, and I need at least 1 to 2. So the value area high is way far up, guys, okay? And I just need 1 to 2. So what I can do here is just target the point of control, okay? Just target the point of control, because you never know what's going to happen at the point of control. As I said before, it can reverse, right? So that's like your, how much? 2.54 RR. That's more than enough, guys. Okay? Simple, mechanical. Let's move on to the next example. All right, guys. So I want to give you another example. And this one, again, is going to be a bit different because I want you guys to have all the tools in your arsenal. Okay? So it's going to be interesting. So let's draw a fixed range volume profile from 3 a.m. till 7. Now, the profile shape is B, okay? Most of the volume is to the downside. So initially, we were expecting that price is going to break out to the downside. But sometimes what happens is just because we have a B shape doesn't mean that price cannot break out in the opposite direction, okay? When we have this type of condition where we have a B shape and a P shape, as I said before, it's very likely for price to break out somewhere. Ideally, I want to see price breaking out to the downside. But what can happen here, guys, the volume that you're seeing right here is just the buyers or the sellers offloading their positions. There's not an actual sellers in control here. It's just they're offloading their positions. So we first break out of the value area high. We go up and we start consolidating here. We stay above the value area high. So that is going to be a breakout setup. So all I need is a breakout above this high because this is the consolidation, right? So when we have a breakout here, that is going to be my long on the retest, stops here, and we can target 1 to 2. Simple as that, guys. No overthinking, okay? Literally, I've given you the best, possibly the best volume profile trading strategy on gold. Let's move on to the last example now. All right, guys, so here's the last example. Again, fixed range volume profile from 3 a.m. till 7 a.m. And you can see the volume profile shape is D-shape, so we can look for a failed auction setup, okay? So what happens here, guys? After 7, we push below it, but we didn't close below. So you got to keep that in mind, okay? We didn't close, so we are still waiting for a close. This right here is the close, and then we have an instant reclaim back above. So at the retest, you could have taken your entry, stops below the low here, and you would have gone for 1 to 2. Or you could have targeted the point of control. As I said before, guys, the point of control, anything can happen here. And as you can see, price just reversed. Now, what happens here, guys? We had a lot of consolidation here, like these equal lows. So most of the time we stayed below the value area low. Okay, so this is a bit like low probability setup that you could take. Okay, this was like the A+ setup, failed auction setup, because we had a D-shaped volume profile and we had instant reclaim. But when you see like a breakout below the equal lows, because we stayed below the value area low for quite a long time, right? Look at this over here. Look at this over here. So a breakout, yes, you could take it. Just risk low on the setup, and then you can play it both ways. So that's going to be it, guys. If you're interested in learning more, there's a link down in the description, and subscribe for more. I'll see you guys in the next one. Take care. Goodbye. Mwah.